FHA loans provide a great way for home buyers to purchase homes with very little down payment. In this video today we'll discuss the latest FHA programs and some of the guidelines. Home buyers that have questions, please contact us at FHAMortgageSource.com or call 1-800-743-7556 7 days a week. The FHA mortgage programs that we'll cover today include the standard FHA purchase loan, the FHA 203K loan for renovations and rehabs, the FHA 203H loan, this is for disaster areas, then a few of the refinance programs, the FHA Streamline Refinance, along with the FHA Cash Out Refinance. First, the standard FHA purchase loan. Just some of the highlights for the program include a minimum down payment of 3.5%. The program, of course, is a government-backed standard 30-year or 15-year fixed mortgage. There is no early payoff penalty or penalties for selling your home, paying off the loan. You can do that whenever you like without penalty, just like any other government mortgage. The credit scores required for the maximum financing is generally within a 580 to a 620 credit score with most lenders and banks. Home buyers' closing costs can be paid by the home seller up to 6%, which is generally more than enough to cover all closing costs and prepaid requirements for tax and home insurance escrows. FHA mortgage insurance premiums can be rolled into the loan. The FHA loan, again, like most of the government programs, does require an upfront fee, and that can be rolled into the home buyer's loan. The FHA loan is for regular single-family homes, townhomes, and approved FHA condominiums. Some additional information for the regular FHA purchase loan is the gift funds are permitted for the down payment. Family members, etc., can provide money as a gift to help the buyer with the down payment and or closing costs. Non-occupying co-borrowers are permitted. A borrower needs maybe a co-borrower to help qualify for the loan. That is permitted. Keep in mind, though, with non-occupying co-borrowers, their good credit does not replace bad credit for the main applicant. That's important to remember. Low cash reserves with an FHA loan. Compared to most of the conventional loan programs out there, FHA is a nice option, especially for first-time home buyers that have little money saved up. It doesn't require really any cash reserves once the down payment and closing costs are made. This is the chart of the FHA mortgage insurance premium, the monthly premiums, and how it's tiered based on the loan to value and the loan amounts. FHA is, again, like some of the other government loan programs where it requires a one-time upfront fee that can be included into the loan. With FHA, it's generally it's 1.75% of the loan amount, and then there is a monthly premium. Okay, most homeowners know that term as PMI, but it's a monthly premium, mortgage insurance premium, that is based on, of course, the loan to value, the loan amount, among other factors, but that is simply a premium that's added to the payment each month for the life loan. The FHA 203K loan. This is a special renovation or rehab mortgage that provides financing for both the purchase and any needed repairs of the home. This includes maybe a new roof or new air conditioning, new flooring, updating the kitchen or bathrooms of the home. That is one of the nice advantages of the 203K is for home buyers that maybe are purchasing a home that that just needs some repairs or updating. Buyers can finance post-closing repairs needed to make the home livable. And the appraisal is based on the after improved value of the home. So that is a neat thing for, again, a home that may need a little bit of TLC. This is certainly a good program, and there's a few variations of it for home buyers that may need under $30,000 of repairs and then over $30,000 of repairs or renovations. The FHA 203H loan. This is a special mortgage for people replacing homes that were destroyed in presidentially declared disaster areas. This includes victims of hurricanes, maybe victims of Hurricane Irma in Florida, Hurricane Harvey in Texas, or victims of all the wildfires recently in California. As long as it is a presidentially designated disaster area. The 203H loan may be used to finance the reconstruction of the borrower's home or to purchase another home elsewhere. The 203H is 100% financing. There's no down payment required like normal FHA loans. One important factor is that applicants have up to 1 year to apply once the area is declared a designated disaster area. So there is a limitation, if you will, on how soon you have to apply for the loan. But this is certainly, yes, if you've been impacted by any declared disaster, natural disaster, definitely something you want to look into. And there's more details on the website, FHAmortgagesource.com. Some of the FHA refinance options for homeowners that currently have an FHA loan include the Streamline Refinance program. This is, like the name implies, a very streamlined program. Requires very little in the way of documentation. There's no new appraisal needed, which is helpful for home buyers that may be in a negative equity situation, meaning underwater or upside down in the value of their home. That is relevant with the Streamline Refinance program. Homeowners can be underwater on the value of their home. And this is great for really the homeowner that simply wants to reduce their interest rate. There's still a lot of, rates are still very low today, and there's still a lot of homeowners out there that may have higher rates from years ago. So this is certainly something that is good for those homeowners that just want to simply see if they can save on their monthly mortgage expenses. The Cash Out Refinance program. This is another program that is limited to 85% loan to value. It does require new appraisal. It will require full income and asset documentation, just like a regular FHA purchase loan. But this program is good for homeowners that do have equity and want to maybe cash out some of the equity to consolidate higher interest debt, maybe remodel their home, pay for some needed repairs around the house, or pay off any other higher interest, maybe auto loans or installment loans, or pay for college tuition, among many other things. This can be a good option. Home buyers and existing homeowners are encouraged to learn more, again, by calling 1-800-743-7556 7 days a week, or just visit us at FHAmortgagesource.com. Thank you for listening.